All right, good afternoon, everybody. Jump right into the disclosure. I am an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. I didn't do an afternoon meeting yesterday, so I don't really remember what changed from 2 days ago. But today I added Rivian long and T triple Q short. All right. Boy, today was kind of wild. I'm pretty tired. Between the price action today and the California time zone and trying to figure this out. I need to figure out a way to sleep more out here. But yeah, certainly a pretty wild day. We had the Fed today. We just had Meta come out after hours. Meta's really interesting. Meta back up to 211 now after pulling back pretty hard. Let's circle back to Meta in a second. And let's start with the actual market. All right, so how do we close SPYs as of right now? Um, as right now, it looks like we're up 10 cents from where we closed, so we're flat on the day. So the S&P closed flat on the day, basically. That's how I'm reading that. The Qs are what? Doesn't look right. The Qs are down 0.1% right now, but they're up about $1 from the close. That makes more sense. So we're down 0.1%, but that's including the dollar bounce that we just had here in the close. So weakness from the Nasdaq throughout the trading session today, and the Nasdaq closed weak, closed negative on the day. It's bouncing back a little bit here, pretty decently here after hours off the back of the Meta earnings report. And your real winner was the IWM. IWM up about 0.75% right now as we're doing the meeting, including whatever after hours action we've had. So yeah, so the IWM is really the big winner today. It's where the strength was. Breadth was pretty good. I want to take a look at the intraday price action, but I also want to take a look at the daily charts. So look, daily charts are holding in. They're holding in. We survived the Fed day. There's an asterisk because we didn't survive tomorrow, but we survived the Fed day with the market technicals still intact. Keep in mind that very often it's actually the day after the Fed day where it's more of a real move type of day. The day after a Fed day has a pretty good probability of being a trend day. We see that a lot. Right now, the technicals indicate that if there is a trend day, it would be to the upside. Um, I wouldn't be surprised personally if we saw it to the downside. I've had a little bit more of a bearish point of view here for the last week and a half, and really all that's happened since I've had a bearish point of view is we've gone sideways and the market technicals have continued to look pretty good. But this meta report here certainly helps the bulls. But we'll see how the market participants really react after they've had some time to digest and interpret today's Fed meeting and see how and if we actually trend tomorrow. But for the moment, these market technicals, I keep saying it, they look incredibly bullish. Don't fight the technicals. I've had a little bit more of a bearish thesis recently, but the technicals are still intact. It's really important to recognize that because that's the most important thing. Um, and the more time goes by throughout this week where we don't break down, the less bearish and more bullish I begin to come again. So, there's nothing wrong with having some mental flexibility. Sorry, there's nothing wrong with having some mental flexibility with your thought process as you trade and as you digest the information and as you listen to and study the technicals. And my thesis and meta here is just another example of it, is that unless the earnings reports are fantastic from the big cap tech stocks, that they should err to the side of the downside because of how much of a run they've had. Google's numbers last night were really good. Stock traded up. Microsoft's numbers were much more mediocre. The guidance was a miss. They sold down. I actually would have expected them to sell Microsoft down further than they did, but they didn't. And now the meta numbers here that just came out were spectacular. So again, I got nothing to hang my hat on the bear side of things if numbers are coming out and they're just absolutely crushing it. And these meta numbers, let me look them up here in the VTF again. Um, Scrolling up. Meta second quarter ad rev 31.5 billion versus an estimate of 30.4 billion. So ad rev solid beat. Active users is a small beat. Second quarter revenue, overall revenue, is also a solid beat by like $1 billion. EPS, really solid beat. Guidance, revenue guidance, Q3 revenue guidance, really solid beat. 32 billion to 34.5 billion versus an estimate of 31.2 or so. Really solid beat. Yeah, I mean they just crushed it here. Report second quarter earnings 298 versus 287 expected. Absolutely crushed it. Stock down ticked a little bit when some of the information came out on their spending. It's Reality Labs. Meta sees 2024 Reality Labs operational losses to increase meaningfully. And if you remember, that's actually what brought Meta down to begin with when it went all the way down to $90 or wherever it was at. Um, Meta sees higher infrastructure related costs next year. Yeah, that's not what the market wants to see. But it's and that's why we ripped higher and then down ticked. I'm pretty sure is because this information hit. You can't deny that this is a phenomenal earnings report, but we've seen it in the past. The market does not like Meta just blowing money on this Reality Labs stuff. Meta sees Reality Labs operating losses to rise year over year in 2023. Meta sees operating losses to rise meaningfully year over year for Reality Labs. Outlook includes about $4 billion of restructuring costs. Continue to invest in opportunities including AI and the metaverse. So yeah, I mean, look, you can't deny where was Meta. Let me pull up an after hours price action chart here for Meta. You can't deny that that was a phenomenal report. We ripped up massively on it initially. Yeah, there's a lot of false lines here in this chart. But we ripped up to 325, and then we pulled back to like almost 304 when the spending kind of news came out. And now we're settling here for the moment. It's still early. We're settling for the moment at around 312, which again, it's still a really big up move. I think we closed around $300 for Meta. So we're up, $12, $13 here after hours and got hit down a little bit. We'll see what happens with the conference call and how that affects things. But like I'm saying, the one thing that would really get me to get very bullish again is just if all these companies just absolutely destroy their earnings reports and we're able to survive the Fed and the GDP and the PCE number. So if this continues to happen, I'm just going to be becoming increasingly more bullish again, which I prefer to be on the bull side of the market. I prefer to have that thought process. It's just my personality better. I still have plenty of longs on, but I'm also short TQQQ. I'm short U Pro. Looks like those meta puts I have are probably going to be worthless, which is fine. I said it. I was purely gambling with some puts in a few of these names with their earnings reports, knowing that some are going to go up and some are going to go down, just with the thought process on more in line numbers leading to a sell off, which kind of has been accurate, but meta here is these numbers are just an absolute monster. So it's kind of big picture a little bit. Going back over to the daily chart for the market, and then we'll look at the 5-minute chart. The bullish technicals are still very, very much intact as we're above 455 in the SPYs. We look fantastic. 80 EMA is fully caught up. 21 EMA is still catching up as well. Qs are fine. Still holding the low I mentioned in the morning meeting today. Bears need the Qs to pull below 374.34, which we are still above. So Qs showed relative weakness throughout the day. Microsoft probably didn't help anything, though Google was bullish, and Meta here after hours is going to be helping the Qs. The IWM, which is also a bullish sign because the IWM tends to be our leader, is where the relative strength was. We talked in the morning meeting today about this bull flag. Some people maybe asked about like a tweezer top, but I was keeping my thought process a little bit more simple about it. This is a bull flag pattern with an inside day. Pay attention to the inside day high, pay attention to the inside day low. And we broke higher on the inside day with the IWM leading. That's always a really bullish sign. No real extension here on the daily chart. That ADMA fully caught up. So the market is fully set to give another leg higher technically if it wants to do that, and if earnings reports like this one from Meta continue to be supportive. The only real, still a couple question marks that are out there, but one of those question marks is, how we react as far as trending for tomorrow goes, for tomorrow's trading session. So that's kind of the big picture. Let's take a look at the small picture. The small picture price action was really sloppy. Um, the beginning of the day, and I got the spies. The spies were the tightest in the beginning of the day. At least the Qs and IWM at least gave a little bit of volatility over the course of the first hour. Spies just were like real tight and sideways for that first hour. And then, we say post 10:30, 11 a.m., expect just choppy price action to come about until the Fed hits. That's exactly what you got here with the spies, breaking lows, coming up to highs, coming back to lows, and then 2 o'clock hits. Initially, also as expected, at 2 o'clock when we got the 25 basis point increase, just a lot of volatility. Honestly, not even a lot of volatility. It was actually pretty muted compared to how a lot of the other Fed meetings have been over the course of the last year and a half. So I should say a little bit of volatility, but no real direction. The press conference starts. That's when we picked up initially with the solid uptick, and then rolled all the way back down on those comments coming from Powell about no rate cuts in 2023, which I think was expected. Um, Potential of rate cuts in 24, but I think he's not expecting inflation to come down until 25. That's what hit us down there. And then Bill posted a great quote. Bill, if you're still here, I'd love for you to copy and paste that if you don't mind, if you still have easy access to it. There was a great quote and kind of interpretation on just reading through. Man, there was just so much like BS and rhetoric. I felt like from Jerome Powell today, kind of even a little bit more than usual, trying to parse through these words that were telling us absolutely nothing. And I thought that the quote here that Bill is copying for me really put it all together concisely. Uh, so Jerome Powell was saying you start cutting way before you get to 2% inflation, right? That's something Powell said. And then Powell adds he doesn't see that happening until 2025. So he doesn't see inflation getting to 2% until 2025. That's what helped downtick the market here at like 3:10 p.m. Eastern. Um, but therefore that means the cuts could be happening in the second half of 2024. That's really the perfect full interpretation as I read it of everything that happened today with everything that Jerome Powell said. The only other interesting comment I think that came out of Powell was when he said that it's not an appropriate time to be providing as much guidance on the Fed's actions as they have previously. I thought that was a very strange commentary because it's been, very much the opposite now has kind of been the what the Fed always does. They telegraph everything that they're going to do in advance. They allow the market to price it in. They don't create any real market shocks. By doing that, they utilize their language as a tool. And today he was like, "Yeah, I don't think I'm going to be doing that as much," which we'll see. And I almost kind of interpreted that as some cover to not have to hike. So I was viewing that at least initially as a bit more dovish, a bit more bullish for the market. Though at the same time, the market abhors uncertainty. So if that creates any uncertainty where we don't really know, what the Fed's actually going to be able to do coming into um, the next meeting, there's a degree of uncertainty there. I mean, I've been able to, and this is not patting myself on the back, successfully predict every Fed increase, how much that increase was going to be for a year and a half now. Very simply because all I did, I never listened to what the Fed funds were pricing in because the Fed funds have been all over the place over the course of the last year. All I've ever done is say, well, Jerome Powell said he was going to do this, so he's probably going to do this. And he's just followed through with exactly what he said he was going to do, you know, pretty much every time to the point where once again today's 25 basis point increase was not a surprise for anybody at all. But we got that big downtick there just after 3 o'clock, and that was off the language of no cuts in 2023, which to me seems obvious at this point. Higher for longer, and that he doesn't see inflation coming down to 2% until 2025, which I think is what they had already previously forecasted. So I don't think that that's actually a change, but it was that language coming out at that time that downticked this market pretty hard to new day lows, just for us to then, bounce back above the starting point again, at least as far as the spies go, and kind of close decently. So overall, pretty sloppy action from the Fed meeting today. We'll see if tomorrow gives way to any sort of a real trend um, situation. So that's all I've got, I think, on the market. I won't spend too much time on individual names unless anybody wants me to go over anything. My big winner of the day was Rivian, which is great. We've been stalking this thing for a few days here. I was involved in it yesterday, and I think I finished like, I don't know, break even in it up small, something like that, because I got a big enough of a move to cover my risk, and then it came down and stopped me out. Um, some of you guys were in it the day before that as well. We kept keeping this 26 on the radar. Right off the open this morning, growth was incredibly strong across the board. Rivian was no exception to it. I had an alert out, and this is why I'm so glad we have a team. I had an alert out at 25.85 to alert me to Rivian approaching 26 because I wanted to keep an eye on it just to see what it looks like, if it approaches that level. And I'm just on a little bit of a different computer setup here as I'm traveling. I'm on a laptop with two portable monitors, and my alert just kind of popped up in a weird spot on a monitor that I'm not really using for trading purposes right now. And I didn't see it right away. And then you guys actually communicated it, and I typed it up on this bar, and I was late. I typed it up, and it was at like 26:20. I was like, oh no, I missed my alert. I really wanted to pay attention to it. And I saw the opening volume profile's looking good. Growth generally has been really strong. And I'm like, man, I really don't want to chase like 26 like quarter in this price. I want 26. If I saw my alert, maybe I would have even cheated in front of 26 because the volume looked good. But I got, a little bit of a pullback here to $26 in that bar and in the next bar. And then I started to build in. And I bought some stock, and I watched it pretty closely, and I bought some more stock. And then Pat said, if this thing closes an inside five, I think it's a really good setup. It closed as an inside five, and I didn't even wait. I took another even bigger ad that I decided to keep really tight on the bigger ad. My original position, I was, going to give some real breathing room to. Probably to the low of the 935 bar, if not to the low of the day. But then I took a much heavier ad when Pat said, I really like this inside bar setup here on the 5 minute for the momentum continuation. I could see that growth was being really strong. I took a much larger ad that I kept really tight, just with the stop loss below the inside five low. And then this thing just exploded to the upside. We finally got the move that we were really looking for. Very quickly getting a $1.60 move to the upside off that $26 level. And yeah, I mean, just fantastic. And the ad on the inside five was super tight risk. I love doing that. Having some stock, I'm keeping a little bit looser, but kind of getting the confirmation set up, or getting the setup where I can take a bigger ad on smaller risk. Because then if it goes like it did here, you can have a boatload of stock for a really big move and get paid in a really good way. So Rivian turned out to be a huge winner for me today. I loved that it looked like a lot of the people on the team were involved in it. I love when we have a big winner, and a lot of people were able to capture it. So big shout out to the team, and big shout out to the team because I was on the verge of missing it. I never saw my alert, and I saw you guys type in Rivian, a couple of you at the same time, and I was like, oh man. And then I saw my alert, and then I was able to figure out a way to be able to sneak in and make some pretty good money off of it. So yeah, really good stuff there on Rivian. I tried to get involved in Tilray today. I got out of that, basically break even, down very, very small in it. Just wasn't getting what I wanted from it. I only had like an 11% short float. But I thought that report looked really good. It kind of reminded me a little bit, even though it's a very different stock, of the Carvana report that we had last May, where they announced a path to profitability, and the stock, has gone absolutely berserk ever since then. So I figured, into the gap here, you got a lot of space. $2 is a spot to watch. So I bought some stock like through $2, like initially, or at $2, I think, on that first bar, knowing that it was extended. I wanted the ADMA to catch up, got this pivot low, stock continued. I think I might have added a little bit at like 96 cents. Once the ADMA caught up to this low, I put my stop there. It got above two, it made new highs. I actually then kept it really tight. I raised my stop to the low of the 945 bar at that point, which, kind of more or less coincided with my price. Was able to sell a little bit of stock on the way up, but it was just very clear and obvious that this thing was not doing what I wanted it to do from a momentum perspective. I wanted Tilray to be doing basically what Rivian was doing, or what we've seen Carvana do, and just go and explode and squeeze shorts and have that earnings report be kind of a game changer for the company. And it wasn't. It wasn't. So I got stopped out and finished down very, very small on it. Basically just called break even and moved on from the trade. Um Other, better trade I took was really in T triple Q. We can just look at QQQ. It's the same thing. When we snap back to the ADMA here and Microsoft looked like it could begin to roll over again, I just shorted some, pretty tight in this area versus the high of the day. I think Josh was involved in that also. And was able to capture this move down on really low risk. And I was just watching the market technicals of the Qs here. This is where you look for that higher low to potentially come in right as the ADMA catches up. I was looking for Microsoft, and I was really annoyed at myself that I missed this Microsoft trade right here. But Microsoft sold off hard in the beginning of the day, gave an extension bounce right into the ADMA. I remember watching it on probably the third bar of the bounce here at 945 and saying to myself, I want to keep an eye on this thing if it continues to trade a little bit higher and approaches the ADMA to see if I can get some sort of pivot to short versus. And not a very clear signal here of like an upside tail or shooting star that you would ideally like to see. And I took it off my radar, took my eye off the ball. By the time I typed it back up, it was probably this 10-10 candle, and I felt like I missed that pivot. But it did roll back down there pretty good. And that actually also played a role in my thought process with the QQQ short that I did take and I was successful with. And yeah, that's pretty much all I got. I think that pretty much sums up the day. Happy to answer any questions anybody has. So let me see here. Uh, Scrolling up in the VTF, I'm not seeing anything. What's Chipotle doing after hours? Just out of curiosity. CPG down. Oh boy, Chipotle trading down. I have not been buying enough burritos. Gotta get to the store. Gotta get to the Chipotle store ASAP. QS reported. QS not doing too much. All right, seeing a question from Keen. At 10 a.m., you said Microsoft would have been a good short, but you missed it. If you had entered, where would your stop have been? It would have been the high of that pivot. So it's not like the ideal setup for me. So first of all, my stop would have been this high, the 955 bar. Um, Ideally, I like this exact thing to occur, but I want this candle where the high comes in to give me some sort of upside tail into that ADMA, or uh, a stronger candle like this followed by an inside five, and the inside five breaks down. I think that those are better execution setups for trend continuation. I tend to not like just the, straight up, straight down pivot that you got here. It is still tradable, but the right way to trade this the way it actually set up would be to short through the low of the 955 candle, because you're negating that candle, and then that high actually becomes a pivot point. So to really do that right, I think you would have had to have shorted 340.30 versus 341.86. For me, that's not ideal. If I was getting like an upside tail there, I could probably get better execution pricing and not have to risk as much. Um, as opposed to here where you're having to wait for the next candle, this 10 a.m. candle, the first red bar there, to break below the low of the previous bar to actually kind of confirm the pivot and then get the execution. But yeah, the stop then becomes the actual pivot itself, or the potential pivot. technically it's only a potential pivot at that point. So hope that helps. Keen. From Eddie Vick. My opinion on Spotify. Sure. Let's take a look at the chart. A little bit of a bounce back in Spotify today after getting hit on that earnings report. I didn't look at the earnings report too closely in Spotify. I found the stock to be tricky to trade. I'm a Spotify user. I'm biased towards it because I'm a paying user of Spotify. I love the service. I love listening to music. I use the service like constantly. And I used to some years ago when it was a relatively new issuance, they had done a direct listing. I was kind of pretty bullish from like a qualitative fundamental perspective on this thing as a user because it seemed like there were no other options out there at that time. Um, Prior to Spotify, I had used Pandora, but I thought Spotify just blew Pandora completely out of the water. Apple Music didn't exist yet. Amazon Music didn't exist yet. Now, fast forward, the stock has not been able to really ever perform, even though it had an initial moat there. And now there's a lot more competition that's actually out there. And I got one buddy as an example who just won't do Spotify because they don't have like that higher quality. Forget what it's called. There's like a level of quality of the sound that, and some of the services offer that even higher, like Tidal, I think, which I think is now owned by Square. Um, has an option for like a higher level sound or something. And Spotify's been saying for a while that they're going to roll that out, but they never have. So I'm very neutral on Spotify, I guess, to directly answer your question. I did not take a close look at the earnings report when it came out because I didn't really care for the chart and I didn't really care for I find the stock to be difficult to trade. So I would say that I'm pretty neutral on it at this point. Fundamentally, I think that the technicals are neutral to bearish at this point. So that's my opinion. From Cameron, I got long Boeing. Oh, that was a good opening trade if anyone was unwilling to pay up. This was on our list for a long versus 220. You did have to pay up off the open pretty decently to be able to get stock, probably at least $2 worth of risk, but it is a $220 stock. So you got long Boeing for an opening drive at 931. I caught a nice move. I parceled out of most of my position and held a trailing position. I stopped out of the trailing position at 1037. Okay. Probably on the break of the 955 low. Um, when 225 broke. Okay, yep, exactly the break of that low. Sorry, I lost my spot. When 225 broke. Was this an appropriate stop, or do your trailing rules call for something different? Sure. So what you did here, and we discussed this actually a little bit yesterday in the afternoon meeting because I think I did it with Neo yesterday, where I cheated on the third rule of trailing, right? So the third rule of trailing is the only one that I'll ever consider violating to some degree, and I'll do it specifically for money management purposes. So my first rule of trailing is that you need a pivot, and this is certainly a pivot here at 955 at that low. My second rule of trailing is that the ADMA has to have caught up to that pivot. So if that pivot low is 225.09, when does the ADMA get to the price of 225.09? It gets there at the 1015 candle. So just based on the first two rules, at 1015, you could now raise your stop to the 955 low, which is 8 cents there, 225 spot oh 08. The third rule is that this is really only a confirmed pivot low of a trend if a new high actually comes in. And that rule you didn't get. So, there's no new high. So technically, if you really were following my rules, you can't raise your stop here. Now, what I also was saying yesterday, and I even did yesterday, is sometimes I will cheat on the third rule very specifically for money management purposes. I feel the need to lock in cash. And if you did that here, that's fine. You just want to recognize that you cheated on it. Because when I have found that rule is a rule for a reason. And there have been certainly times when I've cheated on it. I've raised my stop early, and it's saved me money because I've gotten stopped out of something before it has a bigger rollover. But there's been plenty of other times where violating that rule, well, the rule is a rule for a reason, and I miss out on a much bigger leg of the stock. And that's what happens here. Boeing decides it needs to do like a more of a 15-minute price correction. That's what this low is. Yet that low still holds the opening low. So technically, your stop still should have been this opening low. It creates this bigger pivot. Then it goes, it breaks new highs. Then you could raise your stop to this pivot low, and then you're still involved for this entire trend. What I like to do, honestly, in practice is, putting your putting money in your pocket's really important, but you also want to make sure that you're able to be there for the move. So if I'm considering cheating on the third rule, I typically don't do it with my entire position. And, if you didn't have much size left, that could be difficult, but I tend to not do that for my entire position. So you could have taken some of your position, half your position, cheated on the third rule, raised your stop to there. If you're getting stopped out where you got stopped out, and then this thing totally fails and breaks opening lows, you saved a little bit of money for yourself. But some of my position I still would keep to this low. So, okay, fine, I get stopped out of some of my position. I put some cash in my pocket. Um, but the opening low here holds. I still have that position, and for a smaller percentage of my position, I still capture the entire move. And that's because I split the stops across the board between those two things. I raised a little bit early to lock in some cash flow, but I also kept some to my original stop, recognizing that my rules were not fully satisfied at that time. So I hope that helps, Cameron, and I appreciate the question. Next here from Rex. This morning I tried Boeing at 10:10. Okay. Pulling back into the ADMA, giving a 5-minute shooter, two inside fives in a row. So I see your trade. At 10:10, seeing that Boeing was relatively strong with its earnings. It broke out on the daily level. It gave two inside fives. It then sold off and stopped me out. At 10:30, it pivoted um, back up on the 15-minute off the 15-minute ADMA, but I don't think that there's any setup there. And I agree with you. And the 1040 candle of this like kind of bearish engulfing candle at 1040 took me out to enter the trade. Could you give me some opinion? No, I think that makes plenty of sense. I like everything that you did here. You obviously you missed the more opening momentum trade that Cameron was in, and that's purely what that is, a pure momentum trade. But it's on an earnings name, so that can work. I like your trade. You're looking at the potential pivot. I said it earlier. One of the ways in which I like trend continuation setups is through that inside and up. So the ADMA is catching up, two inside fives in a row. It breaks to the upside. I like your trade a lot. It fails. Fails because the stock decides it wants to do a 15-minute correction. And I also agree with you. There was no real setup here at this low. Um, Maybe this doji on the 15 is something you could execute into the ADMA on the 15-minute chart. I don't love it. Sounds like you don't love it either, but there's a potential little trade there if you wanted to take it. Probably not with max risk or max buying power or anything like that. Um, don't so I don't overly love it for probably the same reasons that you don't. But there is a little bit of a trade there. But I think that everything you did, Rex, is just fine. I think you played it right. All right. Anything else? Is there anything on YouTube today? Take a look. Oh, I can hear myself. That's weird. I guess there's a slight lag on that YouTube. All right, no comments there in the YouTube. Since I clicked to the YouTube, I gave myself a thumbs up. So if anybody else wants to do that, that's nice. But otherwise, I'm gonna wrap things up. So have a great night, everybody. Hold on, Eddie's sneaking in a question. Um, New question. Should we focus more on the 5 or the 15-minute charts? Sure, great question. It depends on the time of day. So in the beginning of the day, the 5-minute chart's the most important. I'm really not looking at a 15-minute chart that first, 30, 45 minutes. It's somewhere around 10:15 to 10:30 a.m. that the 15-minute chart becomes significantly more important. and probably more important, honestly, than the 5 minute chart. But at that time, I don't abandon my 5 minute chart entirely. I start looking at both in conjunction with one another. So I'm looking at the 15 in conjunction with the 5, really starting at around 10:15, 10:30. And that's when the 15 really gathers a lot more importance. But in the beginning of the day off the open, first, half hour, 45 minutes, I'm very focused on the 5 minute chart. Always in conjunction with the daily chart, by the way. I think that goes without saying at this point for anybody who's been in the room long enough. Daily chart is key to everything, and small time frames are for execution. All right, gang. Have a fantastic night, everybody. I will see you all tomorrow.